So in this lesson, we're going to be talking about market conditions. In general, there are two major market conditions, a trending market and a ranging market. And within that, we also have runs and we have pullbacks. So when the market is trending, we have a run, then we have a pullback, we have a run, then we have a pullback. A ranging market is moving sideways. A trending market is moving up or it's moving down. So those are kind of the main differences, but to fully explain that concept, it's pretty straightforward, but you have to understand it to actually trade successfully and know how to actually properly read the market. So with that said, let's dig into the charts. I'll show you exactly what a ranging market is, what a trending market is, and what pullbacks and runs are. Let's have a look. So the first thing that I want to show you is what a ranging market looks like. So when you look at the chart here, over here, we're going to look at the weekly chart first, and I'm going to zoom out. And then you'll see that pretty much price action since roughly 2014 till now has been moving sideways. It hasn't really gone anywhere. The average price would be somewhere around here because it peaks at the highs and then it peaks at these lows, and it's just moving sideways. It is not trending. A trending market will be moving up, or will be moving up like in this case, or will be moving down like in this case. And you can see here, after it moved down, it just started moving sideways. So this is what a ranging market looks like. Now if we look at the daily chart, it will look a little bit cleaner. So if we zoom out, there we go. You can clearly see that we have this major resistance above. And then you can also see that we have a pretty decent support level below. It's kind of a little bit of a zone, but either way, this area right there has a lot of support and is a pretty major support level. And then again, you can see that during this longer period of time, again, this was a few years, we can have trends that again happen on a monthly chart, weekly chart, daily chart, 4-hour chart, 1-hour chart, or 5-minute chart. And we can also have ranges like this that happen again on the monthly, weekly, daily, 4-hour, 1-hour, 5-minute. This in this case is the daily chart, and you can see that it's been ranging for quite a long time. So this is what a ranging market looks like. And another example of this would be right there. Again, check out this daily chart. So if we make this a little bit larger, you can see that over here we were moving upwards. And then roughly in 2017, this range developed. And we have these highs, which are again extreme highs. It's a major support and resistance level, horizontal support and resistance level, with multiple really good rejections. And then we also have the support level below that also has quite a few decent rejections. And in general, this has been moving sideways for a long time, for a couple years here, and it hasn't been trending. It hasn't been moving down or up. It's just been moving sideways. So that again is a ranging market. And the last example that I'll show you of a ranging market is a chart that you've already seen, you're a little bit familiar with, and that's right here. So check it out. You can see on, again, the daily time frame here, we've been moving sideways since 2010 all the way to mid 2013. So 3 years of a ranging market right here on a daily chart. And you can see on the monthly chart, this looks like consolidation, right? So in the previous lessons, we talked about deceleration and consolidation. Consolidation is when price action is just moving sideways. So this is a ranging market on the monthly chart, but it's also consolidating. It's just literally just moving sideways. A range still has these nice peaks and lows, and it just continues to move with this nice fashion, right? Consolidation, pretty much what this is on the monthly time frame, the consolidation here is just moving sideways. Right? So it's kind of a range. You can see that it's a range on a daily chart because it has these highs and these lows, and in general it's moving sideways. But on the monthly time frame, it's just moving sideways. So it's more consolidation on a monthly chart. So know this, that a consolidation on a higher time frame, okay, this is important. Consolidation on a higher time frame, a lot of the times will be a range on a lower time frame. A range meaning, again, we have these highs and these lows, and in general, it's just moving sideways. So that is what a ranging market looks like. Now, in general, we prefer to trade a trending market. Trending market means that there's a lot of volatility in the market. It's actually moving up or it's moving down, so there's a lot of profit to be made there. And that is what we want to focus on. A ranging market is a little bit more indecisive because on a higher time frame, it's just moving sideways, right? It's just consolidating like we see here on the monthly chart, and on the daily chart, it's ranging, right? So because there's that consolidation there and that indecision is just moving sideways, that is why a trending market is a little bit better. So what is a trending market? A trending market, if we look at this chart again, check out the weekly chart as an example. Let's make it larger. You can see here that over here, again, this was that range that we have seen on the monthly chart and the daily chart. It's obviously visible here on a weekly time frame as well. But check it out. As soon as it broke out of the range, it started a trend, higher high. Okay, so we have a higher high and a higher low, a higher high and a higher low, a higher high and a higher low, a higher high, and then it broke down, a lower low, lower high, lower low, lower high, lower low, lower high, double bottom. Okay, so this is what a trending market looks like. It's making these higher highs and higher lows in price, or lower lows and lower highs in price. And it's just moving in that fashion, up or down. So now within that trend itself, we have something else which is called a run and a pullback. So in this case, we have a bullish run to the upside and then a bearish pullback, giving us a higher low. A bullish run to the upside, giving us a higher high, and a bearish run to the downside, giving us a pullback. Okay, so run, pullback, run, pullback, run, pullback, run. And then this started as a pullback, but as it broke these lows now this is a new trend. It is a bearish trend now. It was a bullish trend, now it's turning bearish because it actually broke down the previous low. So now we have a bearish run, pullback, bearish run, pullback, bearish run, pullback, bearish run, double bottom. And here we potentially had a trend change, but it didn't last. It went back down to the lows. So that is a quick example of what a ranging market is. Again, a ranging market is just moving sideways. A trending market is giving us these higher highs and higher lows, or lower lows and lower highs. It's moving up or it's moving down, whereas a range, moving sideways, right? And then within that, we have runs and we have pullbacks. So whenever we have that bullish move to the upside, that's a run. And then we have a pullback, okay? So let's have one more look at the chart. I'll show you another example of this. So let's go back to the initial example here. And you can see that as we have this larger range here on a daily time frame, right? It's moving sideways. It is ranging. So the long-term picture, whenever we look at the monthly time frame or the weekly chart in this case, the long-term picture is that it's moving sideways. It is ranging. But if we look a little bit closer, within that range, we have little trends. Okay, so within that range, if we zoom in just to make this a little bit cleaner to any part of this range, you can see that within that range we are making higher highs, higher lows, higher high, higher low, higher high, right? Lower low, lower high, lower low, and then it just kind of starts trending downwards, starts trending upwards a little bit, starts trending downwards, and so on and so on. So a lot of times within those larger ranges, we also have trends within it. So this is how you approach it. Typically, you got to understand that whenever we have this range and you're looking to take a trade, a big trade, so let's say you want to take a big trade for some reason all the way past this range to the upside as an example, right? So you got to understand that you have no idea whether this will actually break that range or not, right? Because that is very strong support, or in this case, resistance. But a lot of times what you can do is, this is just a note, is if we are trading from the bottom of the range, we can potentially take it all the way up to the top of the range, right? And then if we're trading there's a potential setup, deceleration, bearish candlestick formation, a reversal candlestick, and all of that at the highs, and this can potentially be taken down to the bottom, right? And vice versa. Again, if we have deceleration, bullish candlestick formation, a bullish reversal, then this can be taken up to the top. and continue with that trend, with that general sideways range. But again, know that a range is a little bit more indecisive. It's a little bit more risky than a simple trending market. A trending market is simple, it's clean, and that is what I personally prefer to trade, because we are clearly making new highs and new pullbacks and new highs and new pullbacks. So there's just more room to move and so on. So that is it for this lesson. We're going to be looking much more into this as we continue with this masterclass, because these lessons are just building on top of each other, right? So we already looked at major support and resistance levels. We looked at candlestick formations and so on. And now we're just building on top of that foundation. So this is one of the final pieces to it, because we need to know what a trending market actually looks like, because a lot of the strategies that we trade, they're actually trend-based strategies. And we'll have much more exposure to this as we progress through this masterclass. But again, ranging markets, moving sideways, trending markets, moving up or moving down. And within that, within both of those, we have runs and we have pullbacks. We have runs and we have pullbacks. And whenever those runs are making higher highs, higher lows, higher highs, higher lows, that is a bullish trend. And whenever those runs and pullbacks are making lower lows, lower highs, lower lows, lower highs, that is a bearish trend. And whenever we're just not making higher highs and not making lower highs, we're just moving sideways, that is a range. So that is it for this lesson, guys. I hope you enjoyed it, and I'll see you in the next one.